Finance Minister Nirmala Sitharaman recently said that the government was considering a production-linked incentive or PLI scheme for the chemical and petrochemical sector. Concrete plans and details for the same have not been announced yet. The petrochemical and chemical sector encompasses a wide range of industries, including oil, fertilizers, plastics, and pharmaceuticals. The market size of the sector is currently $190 billion. Addressing the industry body, FICCI, Sitharaman said global investors such as BASF, ADNOC, Rosneft, and Aramco are actively seeking joint venture partnerships to invest in India. She said the government is willing to consider a PLI scheme specifically aimed at encouraging investments in the petrochemical and chemical sector. India is the sixth largest chemicals producer in the world and ranks fourth in Asia. India exports chemicals to more than 175 countries, contributing to about 13% of the country's total exports. Notably, the chemical sector continues to grow at a rate of 1.2 to 1.5 times the GDP. So, given the success achieved by the chemical and petrochemical sectors, why do they still need a PLI scheme? Naushad Forbes of Forbes Marshall is not sure. Speaking to Business Standard, Naushad said the country is already very competitive in OPC and chemicals, and it is a major exporter. He said he is not aware of where a PLI scheme would be justified. Where it is needed more is in APIs for pharmaceuticals, he added. Meanwhile, India was the third largest importer of crude oil globally in 2021, after China and the United States, according to the Observatory of Economic Complexity, a MIT-based trade data visualization platform. Interestingly, that same year, the country was also the third largest exporter of refined petroleum behind the US and Russia.
For many of the basic petrochemicals, also we are a huge net importer. For example, PVC, which is where we import about 2.5 million tons, methanol about 2 million tons, and so on and so forth. There is also almost 100% import dependence for many petrochemicals, many chemicals such as acrylonitrile, acrylic acid, etc. So I think overall, the final reason is also that despite having a very strong process industry and that kind of process expertise within the country, we are still a very small pie of the global market as compared to, say, China.
And are there any hurdles that they need to overcome because of which a PLI might be important?
Two important challenges that the sector faces is one, the bureaucratic red tape or the delays in getting approvals, environment clearances, those kind of things. And second is the R&D manpower. But having said that, a lot of the dumping that is happening because of lower or some sort of subsidies by the developed nations or the ecosystem that they have already developed, or so those can also be addressed by the PLI scheme in particular.
Naushad Forbes believes the test of whether the PLI scheme is working or not is in attaining competitiveness without the PLI subsidy and without protection. We should know if it is working before we expand it further, Forbes said.
That the PLI was intended to provide financial assistance to emerging sectors, new age technologies. At that time, we were looking at batteries for EV, electric vehicles and stuff like that. Now, the limited issue that I have is why conceptually PLI for any manufacturing is a good idea, but that should come with incremental budgets. So the list of industries has already been expanded to 13 sectors, which includes automotives, automobile parts, etc. Whereas I think the focus of the country should be more on things like energy, renewable energy, or the solar module manufacturing, the cells manufacturing, and of course going forward on green hydrogen, for which there is a certain budget that has already been allocated. Now, while any kind of manufacturing, bringing it into India may be a good idea, But if it's going to be at the expense of some of these key sectors, then perhaps that is, in a way, diluting the original purpose of the PLI scheme.
With multiple sectors now benefiting from PLI schemes, the original purpose of the scheme to support the struggling or cutting-edge sectors might come under question. It now remains to be seen if the PLI proposal for the petrochemical and chemical sectors aligns with the primary objectives of the PLI scheme.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.